What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benesocky and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, welcome back to Real Estate Investing Demystified. Really excited today. We have another woman founder CEO on the show from RealtyMogul.
I guess you have a friendship with our guest that's coming on, and then you guys were in Miami, spending some time together.
We recently had some dinner in Miami. We have a lot in common. We both moved to Florida, for lifestyle and business, and we're both new mothers and had lots in common there. So we had a great conversation over a nice dinner together.
Yeah, talking about Florida, every time we start our show, I look at myself, I'm like, man, that Florida tan is fading away. So we got to get back to Florida.
Yeah, currently we're in Vancouver right now.
Yeah, so why don't you go ahead and tell our listeners and viewers about our guest?
Would absolutely love to. All right, everyone. So today we're joined by Jilliene Helman. Now, Jilliene is the founder and CEO of RealtyMogul, a leading online platform for real estate investing with over 290,000 members. Through the platform, individual investors have collectively invested over $1.1 billion of capital into over $7 billion of real estate assets. So we're excited to dive into things with you today, Jilliene. Welcome to the show. Thanks for being here today.
Yeah, thanks for having me. Excited to do it.
Awesome.
He's got more subscribers to our platform than the population of Barbados.
Isn't that a cool stat?
I had no idea. Thank you for the statistic.
There you go. All right, Jilliene. Please tell us about your background and how did the idea of starting RealtyMogul, a real estate crowdfunding platform, come about? And what was the initial vision you had for the platform?
Sure. So I grew up in a really entrepreneurial family, youngest of 7 kids, and 4 of the 7 are, CEOs running companies. And so my dad was an entrepreneur. My mom was entrepreneurial. So I really grew up in this household where, entrepreneurship was really celebrated and sort of risk-taking was, celebrated on the professional front. So I came out of undergraduate business school, went to work in banking. In 2012, I learned about the Jobs Act, which was a new piece of legislation that essentially made the industry that I'm in legal, right? Historically, you could not market private investments. You'd have to know a guy, right? You had to know a guy at the country club or the golf club or, where wealthy people sort of hang out. And the Jobs Act legalized marketing. And so what that allowed us to do was actually digitally market private investments publicly. It was through a piece of legislation that's now colloquially referred to as 506C, so the 506C exemption. And that was really the impetus for the company. I think when the Jobs Act was originally written, a lot of people thought that it was going to be for small businesses. So your local restaurant, your local bakery, your local, dessert shop. And really what I looked at was this legislation. And I said, I think there's a big opportunity here to do something in real estate. Because there's the opportunity in a real estate asset to do distributions, kick off cash flow to investors on certain types of investments, and there should be decent virality around that. And that was really the core concept, over a decade ago. And, we really haven't pivoted the business. We've definitely scaled the business and expanded the business and gone, horizontal in certain directions. But fundamentally, it's the same concept, right? Which is giving investors access to real estate investments, doing it online so they can come and make an investment from the comfort of their own home. And doing it in a way that really takes advantage of this new law that was the first time since the 1930s that the securities laws were, really augmented and changed for the digital era.
Absolutely. Yeah. At the same time, when there was, the crowdfunding buzz really started, also like the world of syndication, putting together funds, advertising, and you have people like Grant Cardone who really came out of that kind of start within that technology and what have you, regulation. What differentiates crowdfunding and for somebody syndicating a deal, putting a deal together and bringing a few investors? What differentiates the two?
Yeah, I think they're really synonymous, right? Maybe crowdfunding is you're doing it digitally, and syndication is you're still potentially doing some of it, at the country club network, if you will, or in the high net worth circles. But crowdfunding is really just syndication on the internet, right? I mean, I use those two words pretty interchangeably.
Got it.
Awesome.
Got it. I just want to distinguish something as well for our Canadian viewers, because in Canada, under the Securities Commission, the crowdfunding, there's an actual exemption to raise capital and certain regulation you follow, like Jilliene talked about, a 506C. In Canada, there's an exemption called the crowdfunding exemption, where you can raise money from accredited, non-accredited investors, but it caps you at $2,500 per investor.
That's right.
Sometimes there's in crowdfunding, the business, the kind of process, and the crowdfunding
exemption used here
in
Canada. Yeah, absolutely.
Yeah.
Jilliene,
there's nuance in the US too. So like, we're actually not a crowdfunding portal. So like, you can be a crowdfunding portal, you can use Reg CF. Like, we're none of that, right? When I use the term crowdfunding, it's really colloquial. We're not a crowdfunding portal. We're a fully registered, broker dealer, but I think crowdfunding is kind of turned into a verb, right? Like to crowdfund, to Google, right? Same kind of concept.
Right.
Exactly.
Okay, Jilliene. Now, Jilliene, what was like the crowdfunding landscape look like when you first entered the space back in the day? Was the real estate crowdfunding environment, what was it like when you started, especially in terms of competition, right? Because you've been in this space for a while now. How did the landscape of democratizing access to real estate investments look like, particularly when they introduced the Jobs Act in 2012?
Yeah, I mean, it didn't exist, right? Like, we were one of the very first companies, to even attempt this, right? So there was no industry. We were so early that there really was no industry. We spent millions and millions and millions of dollars turning crowdfunding into a verb, right? So like familiarizing people with the industry. And, I think at the peak, there were probably like 100 companies doing what we do. We're probably back down to like 5 or 6 now in today's world. There's a lot of real estate companies who will advertise digitally on their own, right? So they're running their own digital marketing and they're building their own sort of databases of individual investors. But as far as, platforms and online investing platforms, there's really only a handful now. So it was kind of this industry that grew out of nothing, had a huge boom, and then frankly, had somewhat of a bust when, companies didn't build the right businesses or didn't focus on the right business models or grew too fast. I mean, there's, any number of mistakes, obviously, that entrepreneurs make. And we made plenty on our own as well. But it's now, I think, stabilized quite a bit with, 5 or 6 players in the industry.
Wow, that's incredible. And obviously, when you first started, there was probably so many challenges. So how did you first attract, being one of the first companies out there and trying to educate everybody what crowdfunding meant? How did you attract your first users and investors into the platform when crowdfunding really wasn't, it was just this new concept?
Yeah, it was very grassroots. So like, I was raising capital for the company. I was raising our seed round. So like, wanted to raise $1 million of seed capital for the company. And I did like any pitch event that I could get into. And it was not only to raise capital for the corporate entity, but, the folks that are at all these, venture pitches and angel investor pitches, they're all accredited investors. And so, my ulterior motive, if you will, was, could they also invest in real estate on the platform? And could I go to these events and get people to sign up with RealtyMogul because they're interested in what we're doing? And then they, subsequently turn into sort of real estate investors. So that was one way that was very sort of grassroots, free, right? I mean, these angel networks typically don't pay you to pitch. They just want, good companies or the opportunity for good companies. So that was one way. Another way, I would call personally everybody who joined the platform. So the first like 2,000 signups, I would call personally. Thank you for joining the platform. It was very much a very high touch sort of approach. But it was, grassroots and high touch. And in the early stages of being an entrepreneur, you do a bunch of stuff that doesn't scale, right? Because it's not about scaling. It's about, getting your first 1,000 raving fans. So can you find 1,000 people who love you and want to buy your product and want to do subsequent business with you? That's what it's all about in sort of those early days of entrepreneurship.
Mm-hmm.
Yeah, I love to hear that actually, because, when I show up to some investor calls over the years, people are like, wait a second, you're the CEO. Why are you? I didn't realize it was going to be you on the call. And it was just, it's a connection that you make. And I say, hey, listen, like, I'm really focused on the equity side of the business as well. And this is a relationship of business. It's a trust business. So I love that you took that path years and years ago, because as we have started CBI Capital as well, we went through that same kind of thing to grow the company.
Yeah, and it's interesting. I mean, when Jilliene talks about the early stages of RealtyMogul and getting those leads coming in and chatting with those investors, we kind of feel the same way. When we first started CPI, our focus was real estate investing, but then we realized marketing and lead gen was such an important part of the business.
Absolutely.
Especially with us, with both Canada and the US. But yeah, talk to us. I also want to kind of decipher this idea of raising money for a real estate deal and raising money for the company that is conducting real estate deals. So you talked about like crowdfunding to raise money for the deals, or syndication. We discuss a lot on this show. But then you talked about seed funding and pre-seed or what have you, VC funding. So when you're raising money for the entity itself, or RealtyMogul itself, for that idea of that business, but then within that business, there's also another process where you're raising money on a per deal basis. I wanted to kind of touch on that, which you have already.
Yeah.
Yeah.
Yeah. So, I mean, our core business today is helping real estate companies raise capital for their real estate transactions, right? And it could be third-party real estate companies. We also have a captive, real estate company that we own and operate, which is part of RealtyMogul. And we also have a fund management platform that's part of RealtyMogul. And they, all of those subsidiaries use the technology platform to raise capital for their deals. So that's like the core business, right? The core business is involved in raising capital today for real estate transactions. But we also raise capital separately for the company itself. And I think that's what you're referring to, August. And most of our capital for the company itself has been from venture capital investors. So our angel round, we raised some capital from accredited investors, but our Series A and our Series B were both financed by, venture investors who are very different than a real estate investor, right? Different risk profile, different reward profile. Don't expect any distributions, long-term duration, kind of long-term life of their fund. So they tend to be quite different from an investor profile. And we definitely saw that in, building our company and raising capital for the company, and then, helping to raise capital for real estate transactions.
Amazing. And a lot of times, on these interviews, we were in preparation for the show, we were kind of watching a few interviews you've been on. And that process really gets skimmed over, where early stages, trying to figure all the mechanics and the moving parts. Did you have advisors? Did you have, mentors along the way to not only, build this new kind of concept, this fascinating idea of crowdfunding, but also then go to investors and VC type of investors? Was there somebody kind of assisting in that process at that stage?
Yeah, I mean, I've had a CEO coach now for like years and years, and I can't imagine operating without them. So it's been a huge part of sort of my growth and my trajectory, because a lot of times, where do you go as a CEO, right? I mean, you're managing the board of directors. And so you obviously want to be having transparent conversations with your board of directors, but you're not having every conversation with that board of directors. I'm also really active in YPO, which is called Young Presidents Organization. And it's a sort of consortium of CEOs. And so I spent 8 years in a forum with 8 other CEOs, and they were all in different industries. So they weren't, in real estate. They were all running different businesses, whether they were healthcare businesses or pharmacies or finance companies, et cetera. So we didn't have any overlap in the type of business, but it was incredibly powerful in sort of, how do you grow a business? How do you establish a business? How do you make sure that you're spending your time and energy on the right things? How do you set priorities? So a lot of that I learned from kind of my, my CEO mentor group, which is a really, really important part of the trajectory of our company.
Amazing that you say that, because I mean, women in this space is a rarity, right? For you guys on the call. So it's great to see that. But no, I want to touch on kind of early stages of RealtyMogul, when you guys kind of utilize that legislation that came out allowing you to crowdfund and raise money for the deals. Were you purchasing real estate deals was a company itself purchasing the real estate deals? I mean, I watched some of your interviews. You guys bought like a duplex, or first deal, or what have you ever did. And now it's kind of that commercial real estate institutional deal with operators. Early on, was there any sponsor operator that you guys were partnering with, or it was a deal that you had purchased yourself?
Yeah, so early on, it was all partnerships with third-party real estate companies, third-party sponsors, but we also had a lending business. So we haven't lent for, some time. Like, the lending business is very much a commodity business, but in the early days, we didn't have enough money to do big commercial deals, right? And so our first transaction was, $110,000 duplex, and that was a loan. So we did like a hard money loan on this $110,000 duplex. We had a couple of investors invest $25,000 in a loan, $15,000 in the loan to sort of make up, that original $110,000. So we had a lending business. It was kind of like a hard money lending business on, single family homes. We're not in that business anymore. We shut that down now, almost 10 years ago. So it's been a long time since we've done any, single family loans, but that's where we started, right? Because we couldn't raise $5 million for an apartment building, right? It was just too big for us and too much for us.
Got it. That makes sense. But is bulk of the business now is investing in apartment buildings while partnering with operators, sponsors who manage and kind of execute the business plan for these apartment communities that are purchased kind of collectively? Is that the model?
Yeah, we kind of have three legs of the stool today. So we have the first leg of the stool is our broker dealer, where we work with third-party real estate companies to help them raise capital. About 75% of the historical business has been in multifamily assets. The remaining 25% in commercial assets. So, industrial, retail, self-storage, limited on office, limited on hospitality, but a little bit of that. The second leg of the business is a fund management business. So we have a registered investment advisor and we manage two funds. One's an income fund and one's an apartment growth fund. So more focused on sort of value add apartments. And then the third leg of the stool is a business called RM Communities, where we actually own and operate multifamily properties ourselves. And all of those businesses are linked. So the fund management business uses the technology platform to raise capital. The real estate company uses the technology platform to raise capital. So there's a lot of synergies across the companies. The majority of the business today is still the digital platform, right? Where real estate companies can raise capital, investors can come diversify into assets. But we've sort of got those three businesses under the one roof.
And that's what we wanted our focus to be on the show, kind of about the platform. So when you raise money for these deals, you guys then partner with a sponsor who's put a deal together. How does that mechanics of that work?
Yeah. So first and foremost, we limit the types of sponsors that we work with, right? So typically sponsors will have a couple $100 million in assets under management. If they're a developer, they'll have developed, hundreds of millions, if not billions of dollars of sort of development. So we're not a place or a platform for a sponsor's first transaction, right? It's just not the right fit for us. We want sponsors who are vetted. We want sponsors who really know their markets, really know their asset classes. So those sponsors will come to us and they'll usually come with a transaction. So most times they've got a transaction under contract. So they just signed an LOI or maybe they just executed a purchase and sale agreement, a PSA. And they come to us and they say, we've got 30 days of due diligence and then we've got 30 days to close and we've got a 15 or 30-day extension thereafter, right? That's how most real estate transactions in the US are structured. And so we'll underwrite alongside them, right? So we'll underwrite that transaction. We'll dig into the merits of the transaction. And really what we're looking for is, do we think that this business plan can be executed against, right? Like there's no guarantees in real estate investing. There's always risk anytime you look at, the potential for high returns. But we're trying to make an assessment of could this become reality, right? Is this a viable business plan? Is this a viable model? Do the assumptions make, sense on sort of a gut check level? And so that's what we'll do kind of alongside that real estate company. They'll go do all the third parties. They'll finish their due diligence. They'll typically go, hard on the transaction. And then they'll put together offering materials, which will ultimately end up on the website. So a private placement memorandum, an operating agreement, usually an investment deck around the highlights of the transaction, the location, the market, the employers, the business plan, right? What are they actually doing? That's going to look very different if it's a value add deal versus a, opportunistic or development deal. And then we'll work with them to get messaging out to the investors on the RealtyMogul platform, right? So we'll send a series of emails, we'll send text messages, we'll do digital media and digital advertising, and we'll start to have conversations with investors around what are the merits of this deal? What are the risks of this deal? Is this the right, risk reward profile? What are the investors' objectives? To really see if that transaction is a good fit for that investor. And the investor obviously has access to all the information, including the PPM that they can review. And then we've built a transaction management technology on our platform so that it's really seamless for the investor. So they can go through, they can do everything digitally, both to get into the transaction. And then once they're in the transaction, they can come to our platform to see their distributions, get copies of their tax returns, get copies of their quarterly reporting. And the beauty for investors is that maybe they invest with, 10 different real estate companies. It's kind of a pain to go to 10 different real estate company websites to go download your K1 at the end of the year, right? With us, they can just go to one place. They can auto download everything. They can get, all of their reports in one place. They can get all their distribution history in one place. And so we've really streamlined that, on the back end from a technology perspective.
Awesome. Thanks for breaking that down, Jilliene. Now we're a real estate private equity firm here at CPI Capital, and we syndicate project specific deals. Now on each one of our deals, we have a minimum investment amount that we tell investors. How does that work with you guys? Do you guys go with the sponsor's minimum investment amount for that particular deal that you're advertising on your platform, or does RealtyMogul have its own minimum investment amount that it goes across all the deals on the platform?
Yeah, so part of our mission is to make real estate accessible, right? And private real estate accessible. And so our preference would be to have as low a minimums as possible. It's not realistic because of taxes, frankly. Like the cost to generate K1s for investors is expensive and, it just is. So
Yeah.
Typically across the platform, the minimum is $35,000. But there are some sponsors who want to do higher than that. There's some sponsors who say, I want to do 50,000. We also have a 1031 exchange business. So for investors who want to do a 1031 exchange, they can come to the platform and find 1031 eligible investments. Those typical minimums are usually 100,000. And then in our REIT, so in the REITs, which are real estate investment trusts, where we're the fund manager, we've moved those minimums to 5,000. So every deal is slightly different. Investors can see what the minimum is on a deal by deal basis, but like in general, philosophically, we're trying to bring the minimums down as much as possible.
And you're strictly focused on 506C. You're not doing any 506B, or is that project specific as well?
We have some 506B that are project specific. You won't see them on our website. So, just for education for listeners, with 506C, we can publicly market, right? So we can put those deals on our website. We can run ads. We can, really make the public aware. For 506B, we can only show those transactions to people who have a prior pre-existing relationship with. And so that's a subset, of folks that are in our broader database. And so there's some, non-marketed transactions as well that are in the background. Usually those are for 1031 exchange investors. So there's a handful of real estate companies who focus on 1031 exchange investments that just have not adopted to 506C. So they tend to be older companies, right? They've been around 10, 20, 30 years, and this is just how they've always done it, and they don't want to adapt. And so we do have some 506B transactions, but they're typically for 1031 exchange investors.
Got it. And in your partnership with these sponsors, I'm assuming they also raise a portion of the capital themselves for the deals.
Yeah, many times they will. Some sponsors have historically focused on institutional relationships, and they'll work with RealtyMogul because they want to build out a retail following and sort of a retail distribution. And so they may not, right? They may only raise capital on the RealtyMogul platform because they don't otherwise have a big network of individual investors. So it really just depends on the real estate company. We're agnostic, right? We want to be helpful. So if you've got a big database of investors and we can help you, fill a couple $1 million to close, great. If you don't have a big database of investors and you want, 100% of the capital to come off the RealtyMogul platform, great. So it just depends on really what the sponsor needs and what's best suited for their situation.
Amazing. In that situation where the sponsor is raising some capital themselves and they're coming to RealtyMogul to raise some of the capital, are the economics different? So if an investor goes directly to the sponsor or comes through your platform, is it same economics? Is one or other more beneficial to that investor?
Yeah, it shouldn't be, right? If anything, it would be better on the RealtyMogul platform. Like, we're not going to sign up a transaction where the investor can get, better economics. So we typically try and be like most favored nation. I'd say 99 times out of 100, it's the same, on either side. And if there's an advantage, it's to the RealtyMogul investor because we won't do a deal the other way.
Of course. It makes no sense to get diluted to come through the platform.
Yeah, we won't do it. It's not good business practice. It's not good reputationally. It's just that's not how we operate, right? Like, I'm a big believer in repeat business. I'm a big believer in, building long-term relationships. I mean, we've already been at this a decade. We want to be at it a couple more decades. There's no point in making short-term decisions.
Of course. And now, again, focusing on RealtyMogul, the crowdfunding platform again, obviously you talked about kind of venture capital investors who come in and invest in a growing company for profits. They want to do that because that company is going to grow and they're going to have a piece of this, giant company in the future. How do you guys get compensated? How does RealtyMogul itself get paid?
Yeah, so our businesses are a little bit different depending on how we get paid, and it also depends on sort of the regulatory structure. So I can kind of talk through today. In our real estate company, we get paid the same way that every other real estate company does, right? So it's typically an asset management fee, carried interest on the back end, which is tied to the performance of the real estate transactions, and then we typically charge an acquisition fee up front. So very, very typical. In our fund management business, also very typical. We take a percentage of assets under management. So it's typically 1 to 1.25%, depending on the fund. And we obviously disclose that, for fund investors, but it's much, much lower than your traditional 2%, right? We just think we're trying to be innovative. We're trying to be, low cost. We're trying to use technology to bring, expense loads down. And then on the digital platform, we structure those transactions today through a broker dealer. And so we take success-based fees. So based on the capital that's raised, that'll be a success-based fee, paid by the sponsor, typically, or paid by the transaction, kind of at the sponsor's discretion.
Got it. So no subscription fee that investor. I know there's some platforms in Canada that they charge the investors who come on the platform a subscription fee or what have you. It doesn't, nothing like that.
We don't have any subscription fees now.
Awesome. Yeah. I mean, I think we got a crash course on RealtyMogul and crowdfunding. But we'll
Absolutely.
switch the conversation a bit here and talk about, I mean, you seem to have your finger on the pulse of commercial real estate, be it multifamily or other asset classes, not only through your own firm, but not only having all these investors on your platform, kind of getting a sense of where the sentiment is, but also sponsors and operators in the industry and other service providers. Obviously, last few years has been a very interesting time in real estate. I talked to Ava that most real estate investors in their lifetime, they go through a few real estate cycles. And since pre-COVID, when we started CPI, we've already gone through a handful of cycles already. So
Been an unbelievable ride.
yeah, just focusing on the last almost 2 years where the Fed started raising interest rates to battle inflation that they themselves had caused as a result of creating so much liquidity in the markets and quantitative easing and money printing or whatever you want to call it. They had to kind of start raising rates, and that got some syndicators, some investors, be it Blackstone at the pinnacle, or be it kind of your run of the mill. A lot of people have got in trouble and end up, in some cases, giving the keys back to the banks. There's also talk of recession. I mean, recession, the dictionary meaning of it is 2 consecutive quarters of negative GDP, which we've been in it, but they're saying that's not a real recession because the job numbers are strong. So it's like a quasi recession. Where are we at currently in the market? What are you seeing? Any stories you can share, of how you guys have weathered the storm, having multiple operators on your platform? Talk to us a little bit about that.
Yeah, look, I would start with anybody who has floating rate debt. It's been a very, very challenging cycle. There was a lot of floating rate debt that was originated in 2021 and 2022, and people are in a painful place as a result of that, right? You're either having to fire sale assets or you're having to raise capital to do cash and refinances. There have not been distributions on most of those projects for 2 years. Like there's a challenge, right? And it's less an operational challenge in real estate than it is a financial and structural challenge. So, a lot of folks are going to get wiped out in this cycle. Again, not because the real estate didn't do well. Office aside, let's put, just take office out of the mix for a second. So you really have kind of like what I call broken capital stacks, right? Where the cost of that debt service has just been so astronomical that, you have to keep pummeling money into the transaction. Mm-hmm. And so there's a lot of situational distress from that perspective. And I think we're starting to see a lot of it. And I think you're going to see more of it through this year and then into kind of the beginning of next year. I'll give you an example. We're underwriting a deal right now. It was built in 2021. Developer built it for $36 million. And we are having conversations about acquiring that property for $12 million. It gives you some extent of like what is going on. Now, this happens to be in a very overbuilt submarket. And so rents are just plummeting. But I'm looking at that and I'm saying, okay, it's a very overbuilt submarket today, but you can't afford to build there anymore, right? And so when we lift our head up in 2026 or 2027, it's no longer going to be a very built over supplied submarket. And so do we want to ride this out for the next 2 years or 2.5 years, having suboptimal occupancy, right? Like we're underwriting in the 80s of occupancy as our base case, because we know that this is situational, right? This is like very much a point in time. I've spent the last decade like preparing myself for this cycle. And when I talk about preparing myself, it's really like emotionally preparing myself. So yes, like financially, I'm preparing myself from can I do the financial analysis and do I have the capital to be able to invest? And are we set up, from a corporate perspective? But really, I think the hardest thing to overcome in a market like this is fear. It's emotion. There's a lot of people who are on the sidelines right now because they're afraid. They're afraid that submarket's never going to come back. They're afraid that $12 million property is going to go to a $6 million property. And it might, right? That might be a $6 million property next year. But my belief is that by 26 or 27, you're back to that being a $20+ million property, right? Using this kind of micro, example of that asset. But we're seeing a lot of multifamily assets like that. They traded for, $40 million in 2021 and, folks are putting it under contract at $30 million or $28 million, right? There's stuff trading at lender basis. So we're working on 2 deals right now on the platform. One, I think, is like one of the only 8 caps that we're probably going to see this cycle. Wow. I couldn't believe it. Like I went to our underwriter and I was like, is there a typo here? Like, is this a true 8 cap on T12? Like, no funny stuff. And he's like, yep, true 8 cap on T12, no funny stuff. Now it's a 70s vintage asset, right? In a decent submarket, but not the best submarket ever, not the best city ever, but a city that I happen to like very much. And so, you gotta sort of pick your spots, right? But I think there's a lot of opportunity to do things right now. I think that I don't know if we're at the bottom or not, right? When you look at historical recessions,
Let me ask you that quickly. If real estate was a clock, particularly multifamily, if the multifamily market was a clock, and 12 o'clock was the top of the market, and 6 o'clock was the bottom, what time is it today?
I don't know. It's definitely not. It's definitely closer to 6 o'clock than 12 o'clock. Let me tell you that much. And the reason I say that is because when you look at a lot of historical recessions, a lot of times they'll actually come to the forefront after the Fed starts decreasing rates again. And so we may go from seeing financial distress in real estate to actually seeing operational distress in real estate, where you've got, declining rents, you've got bad debt because people lose their jobs and they can't afford the rent. Like that may still be coming. But given where you can buy a lot of multifamily assets today, you can get through that, right? You can get through that sort of bottom in the cycle. What you're not going to be able to do is rewind to today, I don't think. Right. And so when I'm viewing these assets, it's not that they're going to be the best performers ever over the next 2 years. You got to think longer term than that, I think. But there's less competition today to buy them. There's some really incredible bases. You can buy a lot of newer product for less than it would cost to develop. So we're definitely closer to 6 o'clock than 12 o'clock. Mm-hmm. Right. Are we 5:30 or are we 4:45? I have no idea.
Yeah.
Right. And I don't want to pretend that I know exactly.
Is it before 6 or after 6?
Oh, meaning are we going on the uptick already?
Yeah.
Yeah.
Have we hit the bottom yet and past it, or are we?
I don't know.
All right.
Don't know. Are we 5:45 or 6:15? That's what you're asking.
That's beautiful.
Yeah.
Exactly.
Yeah. We're somewhere, but probably somewhere in between those two, right? Which for me, like that's enough. I don't need to know if we're 6:15 or 5:45 because if I wait until 5:45, I'm also going to miss 6:15.
Yes.
You know what I mean? So like I want to play from 4 to 6.
It's the Goldilocks time to buy right now.
Yeah, a lot of people would say they want to play from 6 to 8. I actually want to play from 4 to 6, right? I'd rather be in front of it because from 6 to 8, you start getting incredible competition again.
Exactly.
Right. And so it's hard to execute. It's hard to, operate in such a way where you can be really methodical. But yeah, look, I think there's a world where there's still a lot of downside operationally because, you've seen a lot of major companies do layoffs, right? And a lot of big companies just choosing not to hire, right? And so ultimately our economy works on jobs. If you don't have, enough high paying jobs, depending on what you're buying, right? If you're buying affordable housing, it's just a totally different, situation, right? If you're buying, class A, you have a very different renter base. So a lot of it depends on what you believe in the micro market of the renter base.
100%. Last question before we move to the next part of the show.
Awesome, Jilliene. Yeah, I wanted to talk about the vision and future of RealtyMogul. Where do you see RealtyMogul in the next 5 to 10 years? And what are your goals for the platform moving forward?
Yeah, so look, we want to keep doing what we're doing, right? We want to keep really true to the platform that we've built and the company that we've built. And, it's always been around growing prudently. Like I've said to my team, we don't need to be the biggest in the space. That's not the goal of this company. The goal of our company is every day put one foot in front of the other, every day try and source, transactions that we think make sense, risk and reward profiles that we think make sense. And so you don't want to have this unrealistic growth goal, which forces you to do stuff that you shouldn't be doing. When you run finance businesses and you run finance companies, I think you have to do so, or I want to do so prudently. Right. And so it's really continue to do what we're doing. On the flip side of sort of this economy, I think there's some really interesting transactions to be done. There's less transaction volume, so there's actually less to do. But if you can get it under transaction, I think there's some really interesting things to be done. I think there's some really interesting bases to acquire real estate assets. And so I'm really excited about that. And, just stay the course and be a long-term thinker.
Yeah, a question that comes up, sorry, just brought that up, is about kind of strategies on acquisitions, which, I talked to a lot of my friends who are in the equities, and they always talk about, I'm like, hey, real estate has done so well, has beat, like multifamily and industrial have beaten the S&P 500 over the last 20 years. And they always say, hey, yeah, because you guys get to use leverage. Talk to us about leverage briefly. If there was a deal that came across your desk and it made sense to buy it cash, would you ever do that? Or leverage is key?
No, I think if you, have an opportunity to buy something all cash, it could make tons of sense, right? Especially if you're looking at a deal that might have negative leverage today. We're considering buying an all cash deal. Actually, I just got out of our investment committee where we're talking about an all cash transaction. I'd probably, it depends on your risk reward profile, right? Like our plan would be to refinance that 2 or 3 years from now. So like, we're not planning on holding that forever all cash, but all cash makes a ton of sense in today's market, and specifically a couple of weeks ago before, the 10-year dropped so significantly. But I'm totally fine with purchasing all cash. No issue.
Amazing. All right.
Awesome, Jilliene.
Awesome. Yeah. Thanks for all that. Learned
That was
some.
great.
It was great. Yeah. Let's move on to the next stage of the show.
Segment of the show. It's a 10 championship rounds to financial freedom. Jilliene, are you ready for your questions?
I am. Let's do it.
Let's do it. Okay, first question. Who's been the most influential person in your life?
Ooh, probably my dad. He was an entrepreneur and really created an environment for me growing up of like entrepreneurship as a career path. And so without him, I don't know that I would have known that entrepreneurship was a career path and that, owning your own company and being your own boss and working for yourself was even an option, especially as a woman. I feel like, it's harder to get there. I think there's a lot more men who are entrepreneurs than women who are entrepreneurs. And so growing up in that family and in that environment, I think had a lot of impact on my path.
Amazing. All right, next question, Jilliene. What is the number one book you would recommend?
Oh, depends. So one of my favorite books of all time is Ready Player One. This is going to show you how big of a dork that I am. This is like not finance related at all. It's about like haptic systems and futuristic, although it's like less futuristic now in the world of AI. But if you just want like an amazing read, and the movie's terrible. But if you just want like an amazing read, I love Ready Player One. On the financial sort of business side, Outliers by William Thorndike is probably one of my favorite books. It's again, like super dorky, but it's about capital allocation and stock buybacks. And I read that book about once a year just to kind of remind myself of how you can use, financial instruments to be able to build, amazing outcomes for people. So that's one of my favorite finance books. So I gave you two.
Amazing.
Thanks for sharing. Next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
I don't take things so seriously.
Yeah.
Yeah. I mean, I remember I was pretty young when I started my company and like everything was a big deal, and today I don't take things that seriously, right? I have a lot more faith and confidence that things are going to work out as they should and, work hard, show up every day, be disciplined, but some of it's a bit out of your control. And so just control the things that you can control and, don't take things so seriously.
I love that.
Yeah.
Awesome. Okay. Next question. What's the best investment you've ever made?
The best investment I've ever made.
It doesn't have to be monetary. So just whatever.
Probably in my own health. Yeah. Like I suffered from an autoimmune disease and got really, really sick and found out that I had mold poisoning and went down this just like crazy journey of health. And now I'm like super strong. I'm super healthy. But like, not only was it a lot of time and energy, it actually was very expensive as well. Like running every test under the sun. And I've just learned a tremendous amount about health. And it's not only for my own good, but I've been able to help a lot of people. Like I get I'm not a doctor, like by any stretch of the imagination, but I get random phone calls all the time from like a friend of a friend who's like, I have this weird undiagnosed health thing. Like, what should I do? And I literally just have like a canned email now where I'm like, go take these 10 tests that a normal doctor would never tell you to take. And I just know what they are and what they're called because I did them all.
Yeah.
And a lot of times like they'll take the list of their doctor and their doctor like won't do it because they don't think that it's necessary and that, insurance won't pay for it. And sort of there's this whole screwed up healthcare system in the US. And so I'm really proud that I've been able to use that investment that I made in myself to also help other people get healthy. So that's a big one for me that I think about, daily.
Yeah, make sure you send Jilliene an email.
I will. I was.
We need to take those tests.
Yeah, we need to take those tests. All right, Jilliene. What's the worst investment you've ever made and what lessons did you learn from it?
Rent control. 2 words. The worst investment I've ever made was in a rent control building where the business plan was to buy out the tenants upwards of like $40,000 per unit. So like you knock on somebody's door and you say, hey, I'm willing to give you $40,000 to move. I'll pay for Los Angeles. Los Angeles. Yeah, I'll pay for the U-Haul, I'll help you find a new apartment. Like I'll do all the things, right? You just have to literally take a $40,000 check, cash it, and physically move. And like, this is people's homes, right? And the business totally flopped. I hate rent control business plans to this day. Like I just don't want to touch them with a 10-foot pole. There's so much binary risk. So that's the worst financial investment I've ever made.
Mm-hmm. I read an article on rent control and done a bunch of posts on LinkedIn. So it is actually counterproductive to real estate, counterproductive to supply and the tenant at the end of the day. So it's interesting that people think it's a good thing, but it's not. Communism doesn't work.
Yeah, and that's why we're running away from Canada when it comes to real estate investing as well.
Yep.
All right, next question, Jilliene. How much would you need in the bank to retire today? What's your number?
I'm already there, so I won't disclose it, but like, I don't need any more money in the bank to retire. I do this because I love it. I do this because I'm a junkie. I do this because I'm an entrepreneur. Right. And so for me, it's never really been about money. It's always been around like the joy, right? The joy of the journey and helping other people be successful and helping other people generate wealth. And so I don't have one is I guess the short answer to that, because I'm not retiring anytime soon.
Nice.
Yeah, we tend to bring people on the show that really enjoy what they do. So
Yeah.
Very passionate.
Yeah.
Awesome. Okay, Jilliene, if you could have dinner with someone dead or alive, who would it be?
So the personal one is my grandmother, who passed away when I was 12, who was like, just my best friend and a wonderful, wonderful human. I think on the professional side, it would be a Warren Buffett, Charlie Munger duo. I went to the Berkshire Hathaway meeting this year and saw, Buffett speak, which was awesome and sort of one of those bucket list items. But it was definitely sad that Charlie Munger wasn't there. And, so much of how I think and my investments philosophy comes from kind of that dynamic duo. So that would be the professional one.
amazing.
Okay, awesome. Next question. If you weren't doing what you're doing today, what would you be doing now?
I'd be doing something in healthcare. Kind of going back to the, if it wasn't real estate, right? So I think real estate first and foremost, but I'd go build something in healthcare.
Yeah. Your next
It's so
business-
broken.
Yeah, your next business idea. We have a scientist friend of ours who has all these ideas to
That's
do
right.
these tests and
That's right.
and change, get people to live. Like we should connect you guys, but
Live till you're 150, right?
yeah, that's
Okay, Jilliene, my favorite question: book smarts or street smarts?
Oh, street smarts. Street smarts who likes reading books, like.
Nice. I love that.
Well,
That is
that's what we've got so far,
awesome.
yeah. I agree.
All right. And this is the last question, Jilliene. If you had $1 million in cash and you had to make one investment today, what would it be?
Oh, I'd probably figure out a way to make it super tax advantaged for my son. Right. So if you put, $1 million in an account today, 30, 40 years from now, he's going to be, a very, very wealthy, I guess not so little guy, but yeah, something tax advantaged, right? Where you can shell it away or, do it for college or do it for, healthcare, et cetera, but something for the little one.
I love it.
Amazing.
Amazing.
Yeah.
Great interview, Jilliene. This has been fantastic. What's the best way that people can reach you? If you could just let everybody know, please.
Yeah, absolutely. You can find me on LinkedIn. So try and be pretty active on LinkedIn, or you can reach out to us at RealtyMogul. You can go to our website, realtymogul.com is the best way to find us. And always happy to do it. Thanks for having me on.
Looking forward to that next dinner in Miami together.
Yeah, let's do it.
Absolutely. Thank you.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.